Hey, Tim Knight here, and it's a new year. We've just finished our first regular trading day, cash session, full day. This being January 3rd of 2023. And I just wanted to just go through a couple of charts and share some thoughts. Well, on the ES, it's the same old, which is that number 3800, that Fibonacci retracement right there, which is acting like a triple reinforced ironclad wall against prices, is incredible. Again and again and again and again, prices approach it, but they can't bust through it. It is an extraordinarily strong level. We remain range bound, as you can see. And to be clear, this teal line is not a Fibonacci. The Fibonacci spans within view here, way up here, which fascinatingly enough was just about exactly the peak of that CPI mega rally that came and went in no time. But that was this portion of the range, and then we fell really quickly to the other major retracement level, and we have been bouncing up and down ever since that day. So having said all that, in the bull's favor, we are rather low in this range. In the bear's favor, should God smile upon us and we break 3,800, oh goodness, the bulls are screwed. A failure there would be very important, because its strength to date is illustrative of just how much buying there is in that area. But we can dial it back for months and months and months, and you can see again, just bang, 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 bang. With this brief exception, with this very brief October-ish kind of period where it managed to get below, that 3,800 is an incredible level of strength. Let's get back to a daily here. Yeah, you can see it on the daily as well. Let's go all the way to a weekly. And now you can see a little more plainly what we're dealing with. This is the range from the bottom of the COVID crash, I guess, all the way to the lifetime high. And so far, the two main levels that have been in place more than anything else have been this one and down here. The major extreme, so really these three, 1, 2, 3. This one has been a very powerful resistance. This one in recent days, in recent weeks, has been very powerful support. And this one here was the oh my God, you're not daring to go past this level support. That was the October 13 low right there. So these fibs have been really ruling the roost, which I think makes them extraordinarily important. I'm trying to remember what that blue line is all about. It's actually, I see what I was doing. This basically is anchored here. It does a pretty good job breaking out the ranges. So we were range bound here, and we were range bound up here, and now we're range bound beneath it. So this is the ping pong match going on. It's been going on for a good 2 weeks at this point, maybe even more, like so. And so it's going to take some major economic data to release it from its jail cell, either in a bullish fashion or a bearish fashion. As far as the NQ goes, which of course was the major disaster in 2022, the equivalent support was here, but we've broken that long ago. This is a very plain contrast to the ES you were just looking at, because with the ES, we were nowhere near the lows of October 13. Whereas with the NQ, yeah, we are kind of near them, because tech stinks so horribly. Tesla's worth a quarter of what it was. Cathie Wood can't make a profit to save her life. Everything she touches turns to dog poo. Tech is just garbage right now. And if we look back on the weekly on this one, as I say, we are quite close to the October 13 low. And if we just keep sinking, well, goodness gracious me, we're going to be heading toward this next level like that. We've already shaved out a staggering amount. So the Wall Street frauds who were running around screaming about what a great bargain the price is, and look at this. There's nothing bullish about this at all. You know, are stocks cheaper than they were? Well, yeah. You know, what does that mean? It means they're cheaper than they were, and that's it. That's all it means. But the charlatans at investment banks want you to think that it's a great time to get in. I think they will be proven wrong. For me, I continue to be utterly fixated on crude oil. As I've said countless times, it is far and away my biggest sector that I'm short. And we have on numerous occasions, and this is a really tough one to find out kind of where I'm not a football guy, I'm not any sport guy, but I think it's called the line of scrimmage is for this. And I don't like cheating. I don't like being dishonest with charts, and that's not what I'm trying to do, but it's very tough to figure out like where this line belongs. It is something like there, because as you can see, we have on the whole for a couple of months now stayed below this level. And more recently, we have approached it and been repelled, approached it, been repelled. But that's not really where the action is. My view is that the action is in individual energy stocks. And, XOP has been the main driver of that. Again, this is not slope charts, so unfortunately it doesn't involve any beautiful markups. I mean, this is just a stupid mess of price data here, so BFD, you can't read anything in this. But I will say that it was an extraordinarily good first day of the year, principally because of energy. Because let's face it, otherwise it wasn't much of a day. We were down fractionally. Being down 0.11%, that's not going to stiffen any giblets out there. But energy was a nice down day. And I'll just close by saying that the beauty of where we're at now is volatility still completely in the toilet. We're just scrounging around the lower 20s down here, and I think that is an appealing time to get aggressive on the short side, which is what I'm doing. So I'm pretty much 100% committed at this point. So anyway, that's it. It was a good first day. Economic data starts cranking out Wednesday again. Earnings season kicks in a huge way 3 weeks from now, of course, and in a pretty robust and a pretty decent way a couple of weeks from now, but 3 weeks it'll just be like, all cylinders will be firing. So January's got a lot to recommend it in terms of trading opportunities. So great first day, excited about energy and excited about 2023 in general.